In August 2024, the Bank of Ghana issued an exposure draft inviting public comments and feedback on its proposed regulatory framework for digital assets. This is a pivotal step by the Bank of Ghana and marks a departure from its historical stance of discouraging the use, holding, trading of digital currencies due to the absence of a regulatory framework. With the release of these draft guidelines on digital assets, the Bank of Ghana is aiming to balance fostering innovation with safeguarding the integrity of the financial sector. So in the next few minutes, let's walk through the key elements of these draft guidelines to understand what it actually entails. The draft guidelines represent a watershed moment for Ghana's digital financial sector. Now, according to the IMF, less than a quarter of countries in sub-Saharan Africa have any form of regulation on digital assets. 2/3 of countries in sub-Saharan Africa have implemented some form of restrictions on the use of digital assets. And countries like Cameroon, Ethiopia, Lesotho, Sierra Leone, Tanzania, and the Republic of Congo have outright banned the use of cryptocurrencies. The BOG's move signals a proactive approach to embracing the digital economy and recognition of the increasing penetration of mobile technology, a growing tech-savvy youth population, and the rise of cryptocurrency and other virtual asset services. The draft aims to regulate the activities of virtual asset service providers or VASPs, ensuring that their operations align with the global best practices and mitigate risks associated with digital assets. Now, the draft outlines several key objectives for regulating digital assets in Ghana, and these objectives focus on 1. Maintaining financial stability and integrity. The guidelines aim to prevent financial instability by ensuring that the activities of VASPs do not compromise the broader financial system. 2 is protecting consumers and investors. The Bank of Ghana is focused on safeguarding the interests of consumers and investors, particularly in a landscape rife with cybersecurity threats and market manipulation. The third objective is preventing financial crime. By regulating VASPs, the Bank of Ghana is seeking to combat money laundering, terrorist financing, and other illicit activities that could exploit the digital asset ecosystem. Next is encouraging innovation while promoting market integrity. These guidelines aim to strike a balance between fostering innovation in the digital asset space and maintaining the integrity of the market. The fifth objective is coordinating domestic efforts and promoting international cooperation. The Bank of Ghana emphasizes the need for domestic coordination and international collaboration in managing risks associated with virtual assets. This emphasizes aligning with global standards like those of the Financial Action Task Force or FATF in order to coordinate with international organizations to prevent illicit activities associated with digital assets. And the final objective is addressing cybersecurity risks. The Bank of Ghana is aiming to address the significant cybersecurity risks by requiring robust protections for VASPs, including strict data privacy policies, regular cybersecurity audits, and the adoption of advanced security technologies like multi-factor authentication and encryption. The aim is to secure digital assets against hacking and fraud, thereby building trust and ensuring the safety of users and investors in the digital asset ecosystem. Now, the draft guidelines specifically focus on virtual asset service providers. Now, under the draft, the VASPs are defined as entities that provide services related to virtual assets. These entities include exchanges, wallet management, brokerage, custodial services, transfer services, fundraising through initial coin offerings or ICOs, or security token offerings STOs, and financial advice and management related to virtual assets. The guidelines mandate comprehensive regulations for VASPs to prevent financial crimes, requiring them to implement stringent consumer protection protocols, conduct thorough due diligence on their customers, and report suspicious activities to the Financial Intelligence Center or the FIC. To legally operate in Ghana, VASPs will need to obtain authorization from either the BOG or the Securities and Exchange Commission, the SEC, depending on the nature of their services. Now, failure to register within the specified time frame will result in the entity being deemed non-compliant and operating illegally. The registration process is quite rigorous. It requires a detailed company profile, governance and ownership structure, current and projected financial statements, a robust control and risk management framework, an office located in Ghana, a comprehensive description of your infrastructure, including asset storage and access control measures, cybersecurity and data privacy policies, and consumer protection measures. Now, let's talk about the role of enhanced payment service providers or EPSPs and the commercial banks. And the draft guidelines also outline the roles of these EPSPs and the commercial banks in the digital asset ecosystem. While EPSPs may be authorized to provide virtual asset transactions, they will only be allowed to do so exclusively for registered VASPs and with prior approval from the Bank of Ghana. They are restricted from engaging in activities such as operating exchanges, providing custodial services, or holding virtual assets. However, shareholders of EPSPs may establish separate entities for virtual asset related businesses, provided these are funded independently of EPSP operations. Commercial banks similarly may offer banking services to registered VASPs, but are prohibited from directly engaging in virtual asset related activities. So what are the implications and next steps? Now, the introduction of these guidelines is expected to have far-reaching implications for Ghana's digital asset economy. The Bank of Ghana's draft guidelines are open for public consultation and feedback until August 31st, 2024, which is likely to be extended, providing stakeholders, including industry participants, legal practitioners, and the general public, with a valuable opportunity to shape the future of digital asset regulation in Ghana. This consultation period allows for a collaborative approach in refining the guidelines to better suit the needs of all parties involved. So contributions can be submitted to the email of the FinTech office at fintech@bog.gov.gh. The Bank of Ghana's draft guidelines on digital assets mark a significant step towards creating a regulated environment for digital assets. It's important to highlight that the draft does not currently legitimize cryptocurrency transactions in Ghana. What it does is it offers a preliminary view of the regulatory landscape that shareholders can expect in the near future. For businesses operating in this space and for those with intentions to jump in on the space, the time to prepare is now. The Bank of Ghana itself, with the launch of the ECD, is playing in the space as well. By aligning with the guidelines and engaging in the consultation process, you can ensure that your operations are compliant and poised for success in Ghana's evolving digital financial ecosystem when the final framework comes into force. I hope you found this summary valuable. Cheers, guys.